Hi everyone, this is Charandeep Kapoor. In this video, we'll be discussing a basic beginner level strategy of how you can earn more than 5, 10, 15, or even more percentage uh, on your favorite crypto or stocks. Okay, this strategy is very beginner friendly and we'll be discussing the basics of the market, that is buying low and selling high. So, a basic strategy which a trader should use is buy low and sell high. So in this video, we'll be concerned more about the buying low part, and in the next video in this series, we'll cover the selling high part. Okay. And I'll also share in this video how I have been able to buy, how I will be able to buy Ethereum at a discount of more than 6%. Okay. So let's start. So basically, Ethereum is currently trading at a price of $2,222. And what you should be aiming to do is that you should place a limit order at a price lower than that. For example, you can place a limit order at 2200 and buy Ethereum. But there is an even better way to do this. And what is the better way? That is by using a cash secured put option. What is a cash secured put option? It involves selling a put option at the money or out of the money strike. Okay. There are enough materials available on Google if you want to read more about it. And you can just simply Google this part and read more about it. Okay. Now, what is a cash secured put option? So let's go to the option chain of Ethereum and check out how to use this strategy. So here I'm on the option chain. And if I have to use this strategy, what I'll do is, let's say I want to buy Ethereum at 2200. Now, rather than placing a limit order, what I would do is I would sell a put option at the 2200 strike, which is a much better thing to do. So if you were to buy Ethereum by placing a limit order at the 2200 strike price, if your strike price does not get hit, you won't be able to buy Ethereum and you won't be able to make a trade. And if let's say Ethereum goes $10 or $20 lower than the 2200 strike, your limit buy order will be executed and you would obviously be facing a loss of 10, 20 or even more dollars. But in selling a cash secured put option, you will be able to reduce your downside. So as you can see here, the 2200 put option is currently trading at a premium of $54. Now if I sell this put option, I will be able to collect this $54. So basically, I would have made a profit of 2.5% by just selling this put option. And if Ethereum now goes below 20, so if Ethereum stays above 2200, I will have realized this profit of 2.5%. And if Ethereum goes below 2200, I will be able to buy Ethereum at a discounted price. And this is better than placing a limit order because this $54 of premium hedges my downside and reduces my downside by the amount of the premium which I have sold. So let's take an example of this. So I'll go to paper trade here and we'll try to see the charts of Ethereum. And I've already done that, so it is easier for you to see. As you can see, Ethereum is currently at a price of 22.26. And if you were to buy Ethereum right now, and if Ethereum was to go down to let's say 2200, you would make a loss of $22, which is obvious. But in selling this put option, I would only make a loss if Ethereum goes below 2148. Okay, as you can see here, at all points above this level, I would still be in a profit. So Ethereum is trading around 2224. If you were to buy Ethereum spot right now, and if Ethereum was to drop $20 below from here, you would be making a loss of $20, but I would be making a profit of full premium, that is around $56, as you can see here. Also, this has reduced my break-even price down to 2143, as you can see here. Also, if you were to buy Ethereum by placing a limit order of 2200, even if that limit order executes and Ethereum drops $20 below that price, so to 2180, you would be at a loss of $20. But as you can see in this curve, at the price of 2180, the strategy will still be in a profit of $36. Okay, so this is how you can basically sell put options at a price you want to buy your crypto, and you can earn this extra premium risk free basically. So there is no risk in selling this put option versus buying Ethereum at the strike price. Okay. So you would obviously always be making an extra profit of this premium. So here I have the trade of a cash secured put option which I've opened at the 2250 strike. So I sold this option at a price of $30, which makes my break even close to 2220. Ethereum is currently trading around this price only. And if Ethereum expires at this price, this UPNL will go to zero and I will face no loss. Okay. But if I were to buy Ethereum at 2250, obviously since it is trading $30 below, I would be making a loss. Now, if you go back to my order history, and if we check out the previous cash secured put options which I have sold and generated a profit from, we can check that to see how much profit I've made. Now, this is my trade history of the past month. So as you can see, I've collected $30 of premium in the trade which I just showed you. Apart from that, I booked a profit of $40 for the put option which I sold for the 22nd December expiry. And also before that, I sold another put option for the 15th December expiry at 35. So if we total up all the put options which I've sold in this week, so for the 29th, I sold a $30 premium. Before that, a 35 and 40 and another 30. So I sold four options this entire month. And this is the premium which I collected. And as you can see, the total of this premium is. So I was able to collect a premium of $135 doing this entire exercise. Also, now if I go to buy Ethereum, since my trade is now in a loss and I will buy Ethereum spot right now. So as you can see, I would be making a profit of 6% by buying Ethereum. Now, since I've already made a profit of $135. And also one more thing which this does is that it has reduced my average buy price of buying Ethereum. So if I was to buy Ethereum normally, I would have bought it at the 2200 price. But now, since I have sold these put options and already collected $135 of premium, my average buy price of Ethereum is now 2065 only. Now go back and remember when you last saw the price of 2065. So this, as you can see, is the chart of Ethereum. And the price of 2065 was around here. So basically, I've been able to buy Ethereum what it was on 30th November before this whole up move happened. So this is how you can use cash secured put options every week or every month as per your wish to reduce your average buying price in Ethereum, make that extra profit just when you buy Ethereum. Also, it protects your downside as we saw in the graph that now your downside is limited uh, till the premium you have sold, and you will only be facing losses if your asset drops below the limit price minus the premium. Okay, so thank you for watching this and also stay tuned for the next video.